Right now, the U.S. is experiencing increased inflation rates. Used car prices are reaching record highs, lumber prices soaring, gas prices edging upward, and food costs way more. Simply put, basic goods and services are getting more expensive. While it remains true that we've been fortunate to experience an extended period of low inflation, it appears as though all good things do, in fact, come to an end. So what exactly is inflation, and how does it affect investors? Inflation is the gradual increase in the price of goods and services over time. It's measured by monitoring changes in the Consumer Price Index, or basket of commonly priced goods. The U.S. Federal Reserve is responsible for setting the monetary policy and often manages inflation to a certain target percentage, typically 2 to 3% annually. High or rising inflation costs can impact the value of a future stream of cash flow. In response, investors seek returns that are higher than, or keep up with, the rate of inflation. The latest report from the U.S. Bureau of Labor Statistics showed that over the past year alone, the Consumer Price Index has gone up 5%, the highest increase since 2008, when Americans experienced a recession. It's crucial now, more than ever, that investors should be preparing to adjust their investment strategies moving forward and actively strive to hedge against inflation. At Perch Wealth, our team would be happy to discuss our investment model and opportunities with prospective investors. We're here to help you work toward your investment goals. Contact a member of our team today or visit perchwealth.com for more information. This video presentation is not an offer to buy or a solicitation to sell a security. The video is a discussion pertaining to one or more investment strategies and/or asset classes, and is not a discussion of any specific offering, past or present, of securities. As a reminder, there is no guarantee that any investment or strategy will perform as targeted, and any investment involves the risk of the loss of some or all principal invested. This video contains statements intended for educational and hypothetical purposes only, and is not to be construed as a promise of performance. Information presented herein reflects the opinions of the speakers and is from sources believed to be reliable, but all information is subject to change. Not an offer to buy, nor a solicitation to sell securities. Information herein is provided for information purposes only and should not be relied upon to make an investment decision. All investing involves risk of loss of some or all principal invested. Past performance is not indicative of future results. Speak to your finance and/or tax professional prior to investing. Securities offered through Emerson Equity LLC, member FINRA SIPC. Only available in states where Emerson Equity LLC is registered. Emerson Equity LLC is not affiliated with any other entities identified in this communication. There is no guarantee that any strategy will be successful or achieve investment objectives. Potential for property loss. All real estate investments have the potential to lose value during the life of the investments. Change of tax status. The income stream and depreciation schedule for any investment property may affect the property owner's income bracket and/or tax status. An unfavorable tax ruling may cancel deferral of capital gains and result in immediate tax liabilities. Potential for foreclosure. All financed real estate investments have potential for foreclosure. Illiquidity. Because 1031 exchanges are commonly offered through private placement offerings and are illiquid securities, there is no secondary market for these investments. Reduction or elimination of monthly cash flow distributions. Like any investment in real estate, if a property unexpectedly loses tenants or sustains substantial damage, there is potential for suspension of cash flow distributions. Impact of fees and expenses. Costs associated with the transaction may impact investors' return and may outweigh the tax benefits.